Hey, what's going on, guys? Today we're going to talk about in terms of how to use moving averages for day trading, right? So in today's video, we're going to take a look at in terms of moving averages. So first, we're going to discuss in terms of the simple moving average, in terms of how it is being calculated. We are then going to discuss in terms of the most popular simple moving averages, right? Because there's a lot of different periods that you can use. So which one are the most popular ones? Then we're going to go on in terms of the day trading strategies that you can use. So you can trade in the direction of the primary trend, you can trade against the primary trend, or you know what, some people can use simple moving average crossover. So whichever one is the most comfortable for you, we are going to go into details and discuss about it. And last but not the least, we're going to talk about in terms of the differences between a simple moving average versus exponential moving average. Now, in terms of how is the simple moving average calculated, right? I mean, if you look at a particular stock, right, every day at the end of the day, there's going to be a closing price, right? So let's say, for example, you're looking at Facebook, and if you want to go and create a 5-day simple moving average, let's say, you know what, it closed at 150 5 days ago, 4 days ago, 3 days ago, 2 days ago, and today, right? So you get 5 closing prices for last 5 days. Now, 5-day simple moving average is simply addition of all these, the closing prices divided by 5, right? So if you do the math on here, you divide everything divided by 5, you get an average about 155.16. So that's a simple day moving average. If you want to do a 20-day, so you just take a look at whichever the stock price is or the security is, and just divide it by 20 days, divided by 20. If you want to find a 50-day, you find the last 50-day prices and you just divide it by 50. Right, so that's in terms of calculating simple moving averages. Next, we're going to take a look at in terms of the most popular simple moving averages. So different time frames, different times, different needs, right? If you're looking at short-term trading, which is day trading, the most popular simple moving averages used is the 5 SMA, right? 5 simple moving average, 10 simple moving average, or 20 simple moving average. Anything higher than that would not be used for day trading purposes. If you're looking for mid or long-term trades, then you're looking at the longer term or the mid-term trades is usually 50 days. So we're looking at the 50 days SMAs. Usually on TV, on television, you'll find a lot of people, especially the portfolio managers and all who come on TV, they might be talking about the 200-day moving average, right? So how is the stock trading against the 200-day averages? If it's trading above it, then they want usually going to be long. If it's trading below it, then they usually want to be short a particular name, right? So today we're going to discuss everything in terms of day trading. So 5, 10, and 20 is going to be the biggest one that we're really taking a look at. Now, in terms of simple moving average, right, for day trading strategies, now you can try to use it against trading with the primary trend. Now, when you talk about primary trend, you want to define in terms of what SMA you'll be going to use. Are you going to use an SMA, EMA? So which is going to determine what's your primary trend, right? In this chart, we have used the EMA. We are going to discuss the difference between EMA and SMA. So in this one, we're taking like the 5-day EMA, right, which is this orange line on here, right? So the primary trend, if the stock price is above it, then you want to be bullish. If the stock price is below it, then you want to be bearish. So in this first candle, the stock is below it, which is the primary trend is down, right? But if you see going on, the next candle is still down. It starts going up, 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 and starting here, the primary trend changes, right? So the primary trend changes, which means you want to be long in this situation. If you want to be long, the first pullback towards the moving averages is something that you want to go long against, because that is going to be the primary trend as the price is above the 5 EMA. As I mentioned, if you want to use 20 EMA, that could be one you can use as well. So if you're looking at the 20 EMA, that's the blue line over here. If the stock is above the 20 EMA, you want to go long, right? So the first time the stock actually closed over 20 EMA is at this 10 a.m. candle, right? So if it goes over the 20 EMA, you want to go long. So any pullback towards the 20 EMA, you want to be going long against it. And if you take a look at over here, you go long against 90, you get a nice move. again the primary trend is up as the stock price is above the 20 EMA. Once it again pulls back toward the 20 EMA, you see a nice push again. Late in the day, you see nice push towards the 20 EMA, you see a nice push, nice pullback, and nice push. Right, so that's trading with the primary trend. Taking a look at another one, which you want to, so in this one, let's say, you know what, you are using the 5 SMA. If the stock price is above it, you want to go long. If it's below it, you want to go short. So in this one, the price is above the 5-day EMA. So any push or pull back towards the 5-day EMA is going to be considered as a buyable dip, right? So when it pulls back towards the 5-day EMA, you want to go long on it, and this one you get a nice pop on here. Right. Let's take a few more examples. Trading with the primary trend. If the stock is below the EMA, you want to be short, right? So if the stock is below the EMA, you want to be short. So after this initial move, went from 49 bucks to 48.20, you see this moving back towards the EMA moving averages, right? So which means so any pullback towards moving average, you want to be short. So when it goes down, pulls back, you take a short position over here, 48.40, then it drops 40 cents. So that's trading with the primary trend. If you want to use the 20-day SMA, similar theory on here. So as long as the stock is below it, then you want to be short. Now let's talk about trading against the primary trend, right? So we talked about in terms of trading in the direction. What if you want to trade against the primary trend, right? So in this one, the stock is actually falling, and the stock price is actually below the 5-day moving averages, right? So your general intention would be to actually go short, right? But if you'll be trading against the primary trend, what you have to do is you have to take one step higher, which means you have to trade. Take a look at what's the higher time frame. So this is a 5-day, a 5-minute chart, right? It's a 1-day, 5-minute chart. So you want to take a look at what is the bigger picture, right? I mean, on the bigger picture, the stock AYI was actually gapping right into support, right? If it's gapping into support, which means you want to buy, right? Because there is support down here. So so that's the way you want to go and trade against the primary trend, which is when the stock is dropping, you are willing to buy it, right? The first push up, sideways consolidation, and another push up, sideways consolidation, another push up, right? So this is a buyable dip. The reason being is the higher picture is falling into support. Let's take a look at one more. Trading against the primary trend, looking at MU. So with MU, you see the stock is actually gapping up, went from 38 to 41 bucks, right? It had this push down, pull up, push down, pull up, and then it just faded down, right? So once again, I mean, even though the stock is above the trend, what do you want to take a look at the bigger picture? If the stock is gapping into resistance, right? So before we were looking at the stock being gapping into support, so you want to go buy. In this one, the stock is actually gapping into resistance, which means you want to be a short, right? If you want to be short, now you just want to find positions of where you want to go short. So a couple of ways you can trade it is you have this first push, you can try to shorten the first pullback, right? Or you can go and trade against this flat base over here, and then you get a nice flush, right? So two ways to trade against the pullback or against a breakdown. Next, we look at against in terms of using simple moving average crossovers, right? So in terms of crossovers, we're looking at again the two moving averages, the 5 and the 20. If you want something with more certainty, right? So in this one, you will only go long if the short moving average, which is the 5, is over the 20. Right. So in this one, the 5 is still in the 20. You won't go long, but you will, because it's a moving average crossover strategy, is after the crossover. So after this crossover, the 5 is over 20, and then you can actually go long over here. All right. So you don't go and buy the dip over here. You don't go and buy this over here. You wait for confirmation when the moving average is actually above the 20-day moving average, and then you go and buy it. Same scenario, same ME chart. If you want to trade the moving average crossover strategies, what you do is you take a look at the stock gapping up, right? You don't really go short. You don't go short. You only go short once the 5 SMA crosses the 20 EMA. At that point of time, you also have this nice breakdown, right? You try to tap into the support of 40, 60, and so on. Once it broke, it crossed the moving averages, and that's where you actually go short in the name, right? In terms of profit taking, of course, when this short moving averages crosses back the 20 EMA, that's where you can go and take your profits, right? Same thing on this one. The only time when you actually go and take profits is when the moving averages cross over. So that's a crossover moving average strategy. Now, simple versus exponential moving average, right? I mean, simple we did, if you want for last 5 day moving averages, you add last 5 days, closing price divided by 5, you get the value. If you want to go and calculate the EMA, now this is a bit complicated on here, right? Now the difference really is that really significant? The SMA versus the EMA, or the simple moving average versus exponential moving average. So I'll show you, right? So I have 5 EMA and I have 5 SMA. 5 EMA is the orange line, 5 SMA is the blue line. This is a 5-minute chart. Realistically, you know what, is not really a big difference that you're going to see, right? This is a 5-minute chart. Now, what if I do it on a daily chart? Is there going to be a difference? So if you look on the daily chart, once again, there's not much of a difference that you're going to see between the EMA or the SMA. That's when the examples, you did use EMA, but even if I use the SMA, the results would not differ as much, right? So hopefully you like the video. Please do like and subscribe. Keeps me motivated to make more video for you guys. If you have any questions, do comment, and if not, do like and subscribe. Have a good one.